I frequently think about my role as a CEO or an MD of a business around, I just need to do three things. I just need to define a plan and a strategy. I need to get the team right, and I just need to make decisions.
Hello, my name is Shirley Kavanagh, and you are very welcome to the Leadership Discoveries podcast. And in this series, I chat with leaders across a variety of sectors and geographies who share their experience and views on a range of leadership topics. I'm delighted today to have with me Kevin Murphy. And Kevin has a wide-ranging career repertoire as CEO in the FinTech and card payment sector. He's a board member and independent non-executive director, specialises in growth acceleration and business transformation. He also has significant experience in growing, turning around and restructuring businesses in Europe, North America and Australia for a portfolio of PE firms, large PLCs and privately owned companies. Kevin, you're very welcome.
Thank you, Shirley. Delighted to be on your podcast this morning.
Great to chat with you, and thank you for taking the time to do that. Kevin, I gave you an introduction there, which is very wide-ranging, and as I said, it's a very broad repertoire of experience. Can you run us through your career to date and just tell us a little bit about sort of in those highlights over the years?
Yeah, happy to do so. I'll keep it reasonably short. I think of my career really in two phases. So the first phase was the first 20 odd years where I worked in retail banking in the Irish market for large banks and ended up specializing in the area of payments, card issuing, and had towards the end of that period a number of senior executive leadership roles, including managing director of business unit roles. And then 12 years ago, I decided that I wanted to leave the world of big banking and operate in the private equity world, specifically focusing on payment businesses, because that's what I knew and I really enjoyed. And so since then, I have operated and worked for a wide range of private equity businesses, both in roles as CEO of portfolio companies or as an advisor to funds, either for value creation or for assessment of potential acquisitions. So it's been a very interesting 10 or 12 years. It's very, very different than operating in, let's call it, big bank world. And that last 10 or 12 years has allowed me actually operate globally and has proved to be really enjoyable. I've moved countries a few times and I've been involved in lots of different businesses in the payment space. I only focus on payments because that's what I know and I think I have a pretty good understanding of it, notwithstanding that the payments world globally is just huge. So there's plenty of scope for me to operate in that space.
And I'm just conscious, Kevin, we have people who listen to this podcast from a range of different sectors. So if you were describing FinTech and the card payment sector, what does it look like to Joe Public or somebody who just is a customer of this sort of service?
Yeah, ultimately it revolves at its core about moving money. And there are a number of well-known names that your listeners will know internationally that are operating in the FinTech space. But there's also a lot of businesses that operate, let's say, one level below what the consumer sees and are involved in issuing millions of cards or running large processing platforms for cards. So the infrastructure that underlines payments and FinTechs is actually quite complex, and there's lots of businesses that operate in that space that wouldn't be known to the average consumer or the average business consumer, but are still very fine businesses. So people, when they think about FinTech, frequently think about the new brand names that have come on the market, and some of them have done really well. But actually underneath that, there's a whole ecosystem of payments businesses that operate, and some of them are not well known in the slightest and yet are huge businesses.
Okay. Thanks for that. In my introduction, I said that, you spent a chunk of your career within the private equity space. I know we may have listeners who are in the process of being acquired or who may have just been acquired, for instance. Could you explain to me how does leadership change in that context? Because I know you and I have often spoken about private equity, and we've talked about the transaction. And I'm just wondering, how does human-centered leadership marry with that concept of a transaction, or does it?
Yeah, it's very different. So go back to what I talked about earlier, Shirley. I said I spent the first 20 odd years in big banks and then the last 10 or 12 years in private equity. I really had to change my headset when I moved into the private equity world across a whole range of factors, but including leadership, speed of decision making, etc. The private equity world is really interesting, but it's ruthless. I remember doing a town hall meeting for the last business I ran in Ireland, which was owned by a private equity fund. And one of my colleagues on the floor asked during the Q&A, well, what does the private equity fund think of us? And I said, well, I'm really sorry to be blunt, but they don't think about you at all. They don't think about the staff. They don't think about the customers. They don't really think about stakeholders. They think about numbers, and you are a transaction or you're a set of numbers on a portfolio. And ultimately, if you think about what private equity is, it is a fund of money that is given to a group of people to deliver extraordinary returns. And that's what they're focused on. So they're focused on the financial return. It's a much more, from my experience, dynamic,
Hmm.
ruthless place to operate than in large traditional banks. It is much more focused on delivery and focused on the bottom line. And speed of execution has to be really quick. So typically, if I take on an assignment for a private equity fund, I'm thinking about 1 to 3 years. That brings you to leadership then, and leadership having to be high impact, high results at pace. So you're not going into a role typically with a private equity fund, from my experience, where you're thinking, well, I'm going to have 7 years here, or I'm going to build a career of 10 or 15 years. You're
Hmm.
thinking, actually, I've got a year or two to make a real impact on this business and then see where that goes. And always from my engagement with PE funds, the moment they're thinking about buying something, they're trying to figure out where they're going to sell it. So they're looking at the journey of like a year to 3 to 5, maybe. And they're thinking about, well, if we acquire this, how do we exit? And it just brings a very razor laser focused on results, numbers, performance. And that then moves into how you run the business, how you operate as a leader, how you make decisions, the speed at which you make decisions. And it really is a very different world of leadership than I found in a typical large bank, having worked in a few of them.
Can we talk about that a little bit more, Kevin? Because as you're talking, I'm reminded of a piece from Professor Michael Watkins, originally from Harvard University, who talks about, the importance of situations and different leadership. Exactly what you're talking about there, different leadership within different contexts. So in this context that you're talking about, it's obviously very, very different to, let's say, something where we're maybe in a sustaining success mode. It's in a very different space. How do you motivate people in that type of world?
Yeah, so typically, Shirley, the situations I go into require a significant turnaround. So the typically businesses that are in difficulty or not performing anywhere near the optimum and need a set of surgeries or need some radical attention to get the business back into a sustainable situation. Motivating people in that situation can be quite challenging because typically people who are in the business may well have been through a difficult period of time over the past year or 2 or 3 where the business has not been performing, it's not been straightforward. I frequently say that the honeymoon period when you go in as a new CEO to a business like this lasts about a day. So you get a day to meet the people inside, and then immediately you're starting to think about where are we going with this business? What do we need to do to rescue it, to turn it around? And then to me, it's very much around getting a very fast handle on that. You don't have months and months and months to get a handle on where you want to go with the business. You've got to very quickly articulate to people at least a plan. It may not be a 3 year strategy, but it can definitely be a 6 or a 12 month plan to actually work the business out. Some of the difficulties that it's currently involved in. And some of those decisions will be difficult. So they typically involve cost cutting, they could involve exiting businesses, restructuring, but just being clear to people on what the plan is and communicating and then communicating and communicating. And I think just acting with integrity and
Hmm.
telling people the truth about the situation. There is no point sugarcoating it. So telling people the truth about the situation that you assess in the business, and then very quickly what you plan to be the actions that you're going to take. and trying to just regularly communicate that to people so that they may not be super motivated by the idea of what's coming down the line, but at least they're very clear on it. And then they'll hopefully join on the journey to rescue the business or turn it around or get it onto a better growth platform. I also believe that the minute you walk in the door as a CEO of a new business, you're immediately assessing talent. I remember in a business a couple of years ago, we moved on a sales leader who, after 3 months, and he said to me, "Well, Kevin, I've never had an opportunity to do an interview." I said to him, "But every single engagement we've had since I've walked in the door has been an interview. So you've got to be brutally honest and you've got to assess the talent that's available to you within the business and make early and quick decisions around the people that you believe have the skills to deliver on the journey that the business needs to go on. And then just open and honest conversations with people that don't have those skills and need to basically move their career somewhere else." I've also been fortunate in that I've had a group of colleagues who have come and followed me into different businesses over the past 10 years. And depending on the situation analysis that I find, I may need to have an operations guy or a salesperson. I'm able to bring some colleagues in to immediately support because no CEO can do it on their own. Leadership to me in that zone is it has to be high impact, articulate a plan, at least if it's not a strategy, a plan, communicate well on what it is that needs to happen to the business, and then be open and honest with people about what that's likely to involve.
Hmm. And as you're talking, I'm thinking of what style of leadership this is almost. So it sounds like it's very much in the transformative space. Is that really what we're talking about here? Is this transformation?
It is, absolutely. So my leadership style works best in situations where it's quite a messy scenario that we're involved in, or maybe it's a carve out that needs to be done. My leadership style does not work best in a steady as she goes situation, particularly in a PE world. You rarely get to that steady as you go situation. It tends to be situations where there's a lot of transformation required, or rebuilding, or there's a carve out, or there's a restructuring or disposals. And that's where you just have to have high impact as a leader, and you have to be direct with people, and
Hmm.
you've just got to move at pace. I remember very early on when I moved into PE, I needed to spend in my first assignment about 200 grand on a consulting assignment. And I rang the PE partner and said, "Look, we're going to need to spend this. Will I set up a meeting?" I told him what it was for. I said, "Will I set up a meeting? We'll do a presentation. We'll come to London and present it to you." And there was a pause on the line. And he said, "Just do it, Kevin."
Mm.
It's quite a break from having worked in big banks before, where if you wanted that kind of spend, there'd be 7 level of committees to go through, there'd be 46 stakeholders you have to talk to, 3 levels of approval. Whereas actually here, it's all about the results. So it's you've got the mandate, typically, in my experience as a CEO of a portfolio company, a PE fund, to make it happen, but you've got to do it quickly. And there's no standing on ceremony. And I've worked in PLCs and I've worked in PE funds. Governance is different, but the speed of movement and execution under PE funds, in my experience, is much quicker. That's not always, they don't always get decisions right. And that's one of the things I reflected on in preparing for this podcast is when you move at pace, you've got to make decisions. You frequently have to make them without perfect knowledge or maybe faster than you'd like. And you'll get some of them wrong. And I've certainly got decisions wrong in the past. But on balance, you'll get much more of them right. And moving at pace in a transformational type situation is just critical. You don't have the luxury of hanging around. So
Hmm.
you've got to show progress and you've got to show a route map to where you want to go. And then you've got to execute on it very quickly.
When we started off this conversation, we were talking about this piece around almost motivating people around you, or with your own team looking downwards, and now we're moving into that space looking upward. When you think about managing that relationship, which is obviously very demanding in terms of expectations, what is it? What's the essential ingredient from your perspective to successfully manage that relationship with the PE fund in terms of you achieving what you need to achieve as well, of course?
We've talked in the past with some of my colleagues around if the numbers are green, you never see the Americans. If they're red, the Americans are in your bed.
Right.
So, firstly, if your numbers are green, you get a lot more latitude from the PE funds. But the best PE funds I've worked with, you work hand in glove with them. So they'll have operating partners that may well come in and help you with different parts of the business. So, for example, if you have a sales go to market challenge, they'll typically have expertise that they can bring in. So I would have started off initially 10 years ago thinking, well, I'll keep the PE fund at a distance and I'll report every Friday or every month and just I get on with it. But actually, the more I've worked with them, and particularly the top end funds, they bring an awful lot to the party. They don't want to run the business. That's my job. But what they can do is they can bring expertise, strategic understanding, they can bring networks, they can bring skills, they can bring resources. So, stakeholder management is a critical part of that. So, in many ways, and I think I've written about this in one of my own blogs. When people look up at a CEO and they think, well, the CEO, he or she is at the top of the organization. Actually, frequently, I think the CEO is at the middle because above the CEO, there'll be investors, stakeholders, maybe a PE fund, community, clients, and they all have to be managed as well. And it's certainly something that I definitely need to continue to do better at in terms of stakeholder management. So when I go into a business, I'm typically, I think, pretty good at communicating within the business. I'm very happy to do town halls and take unprompted questions from the floor and deal with them. But actually managing the stakeholders then, let's use the word above me, is very important. And they would be the funds, potential investors, external regulators, etc. That's as much of the job as a CEO as actually running the business internally and doing what needs to be done.
I love that, actually. I have to say that's that visual almost of leadership in the round, in a sense, that you're kind of in the middle of this system rather than just, from the top down. Really interesting, Kevin. Very nice segue there as well, actually, into some of your recent blogs and content on LinkedIn. I've been reading them with interest. And one particular one you wrote recently was around the 6 areas you believe leaders need to focus on when leading a business. And you might have covered some of these, but I think one of the ones that struck me was very much around the piece of making tough decisions. And I know you've made tough decisions in the past, but can you tell the listeners a little bit more about that?
I frequently reflect that the easy decisions get sorted on their way up to the CEO or the MD's table or the board table. So you typically only get involved in, let's say, the messy decisions and types of situations that I tend to work in and excel in are turnaround and challenge situations. So they typically involve making difficult enough decisions, whether it's about people or priorities or resources or regulatory matters. As I get older, I've listened to my instinct and my gut more than I would have done when I'm younger. And I think that represents experience. I now operate payments businesses globally, whereas 10 years ago, my footprint would have been maybe Ireland and a little bit in the UK. But actually, the principles underneath what I'm looking at, because they're payments businesses, are broadly the same. One of the key facets I have found that you will need as a CEO, particularly in a PE type world, is resilience and the ability to actually make a decision, and they can be tough as we talk about, with imperfect understanding or imperfect knowledge, but you've got to inject momentum and pace, and then you've got to be resilient enough to deal with the bows and arrows that come with that. Tough decisions also, as we touched on at the start of our conversation, Shirley, about people. And again, my learning has been where somebody doesn't potentially fit for the future direction of the business, and they could be really good people, but just the skill set doesn't fit, address that early. Don't leave it linger because it only becomes a problem for everybody. So address it early, but be open and empathetic with people when you're having conversations, but act with integrity. So you've got to move on these tough decisions, whether it's people or priorities, at pace and quickly. And I frequently think about my role as a CEO or an MD of a business around I just need to do three things. I just need to define a plan and a strategy. I need to get the team right, and I just need to make decisions. And if the decisions are teed up properly, and that's where some of the people who have worked with me in a number of different businesses are really good at gathering a lot of information, boiling it down and distilling it, and then getting to look, we've got three options here. Here's the three options, maybe a recommendation, and you make a decision. And then you move on. because you don't have an awful lot of time in a PE world to actually just sit and prevaricate on the decision. I think it's something I've got much better at as I've got older. With experience, and I do listen to my gut frequently on stuff, not always right, but I think it's better to make 80% of decisions right, maybe with 20% that you need to revisit or you need to reorientate, rather than just not making decisions. I frequently think back to when I worked in large banks in the Irish market and wonder, actually, as an executive, did I actually ever really make a decision on my own? Because that's the other piece that happens in a PE world is you're very accountable as the leader of business. So ultimately, it's not like you're going to have a steering group of 20 executives all at your level and it's gone through 4 levels of governance. It's like, here's a problem, here's a decision that needs to be made. Your team will work with you, but you're the CEO or the MD. Make the decision, believe in it, and then execute on it.
Hmm. And it's interesting. Like there's so much actually just in that piece that you talked about there. But three things you talked about as being essential: have a plan, have the team, and make decisions. So the real sense of not prevaricating, I suspect, as well when it comes to those decisions.
It's very much in a PE world, and that was a big change from when I moved from large banks into a dynamic PE world. And it's linked to how they're set up. Back to what I said earlier, they're here for they make an investment, they want to return in 3 or 4 years, maybe
Hmm.
even in 2 years. A business I ran in Germany and Luxembourg through COVID, within 18 months, we carved out a business from a much larger business. We stood it up on its own and we sold it. And we did that in really record time. It wasn't the prettiest as we did it, wasn't necessarily the best outcome, but for the ultimate parent group and the original fund, they got what they achieved. And we did that by just speed of execution. So, yes, it was a bit bumpy at times and it wasn't perfect, but we managed to get there. And so, very much in a PE world, it's around having a bias for action, a bias for making decisions, and then moving things forward. You just do not have the time to prevaricate. But
Hmm.
of course, a link to that is the piece around stakeholder management and bringing the fund with you so that they know what you're doing. But typically, before you go into any situation for a fund, you've done a lot of work with them beforehand. They know you. You've looked at the opportunity or the turnaround situation. Maybe you've even agreed at a high level the plan you need to execute on before you go in. So you're not going in the door and saying, "Hey, I've got 3 months to figure this out." You're actually going in with a reasonable idea of what needs to be done.
Okay, great. Can we just kind of flip a little bit and just talk about you, in fact? And you've made a number of career changes over the years. And I know there may be people listening to this conversation and who might be in that space themselves. So, could you tell us what prompted you to make your career changes? And what advice would you give to people who might be in transition, leaders who are kind of on that little bit of the edge there, or who have just made the transition? So, tell us just a little bit about your story around that.
I was very lucky in some ways, Shirley, that I met people along my career journey who gave me great advice. When I left Bank of Ireland in 2011, 2012, I had the opportunity to walk in the door to another job in another major bank, literally immediately. I could have left on a Friday, one bank, and walked into the next one on a Monday. But I had great support from an outplacement executive coach who said to me, and I was in my early 40s at that stage, he said, "Look, you're going to be working for the next 20 years. What do you want to do?" And that's not about, how much you're going to earn, pay the mortgage, any of that stuff. He said, "What do you want to do?" And we took a bit of time, and it took me a couple of months, definitely. And we framed it down to I know what I want to be is a CEO for payments business operating internationally in a private equity world, 3 to 5 year situations, and specializing in turnarounds. That's what I do. And it's what I do best and what really rocks my boat. Don't rush into a job necessarily. Obviously, you need to be able to fund yourself, but take the time to decide what is it you want to do with your career and with your time and your energy for the next 5, 10, or 15 or 20 years. And I took that time. I went through a process. I turned down opportunities that weren't consistent with what I wanted to achieve. And then for the last 10 years, that has been what I've been out to deliver. I've mentioned I've worked and lived in Germany running a payments business. I'm back now living in London. I've recently been running a global business listed in Australia, but they all tick the box of international payments businesses operating as a CEO. So, what I'd say to anybody is take some time out. There is work out there, and you will get work. You will have to work hard at times to find it. But be very clear about what you want and what you're enthusiastic and energetic about. And that becomes your proposition. Then, when you go and meet with prospective employers or recruitment agencies or whoever it is, people in your network, you're able to say to them very succinctly, this is what I want to do. I want to be, for me, I want to be a CEO in a payments business operating internationally, 3 to 5 years, ideally private equity backed in a turnaround situation. That's what I'm about. And so everybody's got a different proposition that they can bring. And I fully believe that if you're clear on what your proposition is and you're able to articulate it and then you're consistent with it, you have the best chance of getting a career for yourself that's interesting and engaging. So I'm in my mid 50s. I love what I do. I really get a buzz out of it. I probably put too much of myself into roles when I go into it, but I get a real buzz out of turning around and rescuing businesses. And that's what I want to do for as long as I keep working full time. And so, very much, I would say to people, just spend a bit of time and get clear on what you want to do with your career. Your career is a ladder. Is it up against the right wall? So at the end of climbing to the top of the ladder, wherever that's going to be, is that where you want to be? For some people, they want work-life balance or they want to do things outside of work. For me, I'm very energized and enthused by the type of work I do. I get a great buzz out of it. And so, very much my advice to people, and I do a small bit of mentoring for professionals, is take the time, be really clear about what it is you want to do and where you want to excel and where you want to spend your time. Because you're going to be spending 40, 50, 60, 70 hours a week. So, it should be something you really like. And I also say, don't focus on money. Focus on what's going to give you the best sense of self achievement and worth and accomplishment, and then the money will follow that. So that's the advice I would give to people: is take some time out, be clear on what it is that's really going to rock your boat, and then go and see if you can make it happen.
Great advice, Kevin. And I'm really struck, I have to say, by this sense of not panicking, and also maintaining that laser focus on what it is that you actually want for yourself. I think that's fantastic advice. One thing that you mentioned there, you're sitting in London at the moment. I know sometimes I've talked to you, you're in Australia, sometimes you're about to get on a plane. So you've worked in a variety of different cultures. What are the tips for leaders in terms of that cultural awareness, that cultural intelligence that people need, who are working across different countries and cultures?
This has really become something I've tried to tune into in the last 5 years. It started when I moved to work in Europe, and I based myself in Munich, and our business was run out of Luxembourg and Munich. And we did a poll. We had about 100 colleagues. We did a poll around nationalities, and we had 26 nationalities. And then one of my colleagues from Germany said to me, no, no, we have 27. Bavaria is a nationality. Bavaria, as you may know, is a state in Germany. And so it's not even cultural differences in terms of nationality. It's actually where people potentially come from within larger countries. And I started to tune into this in Germany very much because we had a very, very diverse workforce. And people worked in different ways depending on where they came from nationally. Also, we frequently had colleagues who were we operated in English. That was their third language or their fourth language. So sometimes their articulation of an issue or a feeling or what they wanted to do, because it's their third language, just may not come out the way they intended to. So they're all characteristics that you have to be in tune to. Working now more globally, I've noticed that the Australian way of working is a bit different than I would be used to here in Europe at times. But also it comes into, we operate here in Europe in a highly regulated market that when we look at my colleagues in my last role in the US, they don't operate in that regulated market. So that's not quite cultural, but it does bring different experiences that has shaped the way they want to do things versus, say, payments business that I've operated in Europe have all been highly regulated. So, there's cultural differences, there's national differences, there's just differences of experience where people have operated in regulated businesses versus not regulated businesses. I have four personal values I try and adhere to all the time around integrity, passion, transformation, and empathy. Empathy, particularly, I think, comes to play when you're trying to deal with people who are listening and really just trying to spend time understanding where people are coming at on issues. Is I found the best way to try and deal with it. Because it could be that they're working in a country outside their home country, they're working in a language that's not their own, they're working in an environment that's very different. So you do need to take time, but there's a balance as well when you're owned primarily by a PE fund and there's a desire for results, and you've got to move at pace.
I mean, there's a thread I have to say, Kevin, that's coming through this conversation for me, and it's very much that piece around communication. Whether you started off at the beginning of this talking about the necessity to communicate, with people when they're going through an acquisition activity, and even now we're talking about it in this cultural sense. What about the future in terms of what leadership looks like? Because I mean, 2024 has obviously been, yet another period of change in terms of the economic perspective, geopolitical conflict, and extraordinarily, it's also been the year of the election, where I think a quarter of the world's population have actually been undergoing elections. And of course, there's some interesting ones coming up. We're not out of the woods quite yet. Looking forward then to 2025 and future focused leadership, what is it that people need to think about? Or what advice would you give people, when we look into the next period?
A couple of thoughts on that, Shirley. I think the basic principles of leadership will continue, but it's certainly a more challenging time at a macroeconomic and macro political sense, I think, than maybe we've seen for quite a while. I think then leaders need to have resilience. And I'm not brilliant at this, but definitely being able to take themselves out and have a bit of work life balance because it is tough. And like many of the payments businesses that I'm aware of and that I'm involved in, or even just looking at, like they're having quite a challenging period of time. The funding crisis has caused issues. There's going to be consolidation in the market, etc. So we won't all survive. Resilience is very important for leaders. Sometimes it's a bit like a stage act. You may not feel your best, or you may feel under significant pressure, or you may feel stressed about stuff that you're dealing with as a CEO or an MD in a business, but you can't always show that because people watch your behavior. And so it is around being resilient, being confident, and expressing that. I frequently, when I do town hall meetings, I will always take unprompted questions from the floor, always as a principle. And I just say to people, if I can answer the question, I'll answer it. If I can't, I'll find out the answer for you. And if I can't tell you because it's confidential, I'll tell you. And so I think leaders just need to be very visible in their organization and very open communication and help people go through what are pretty challenging times, whether it's economically or whether it's at a macro level globally. There's a lot of challenging events. So you've got to help people understand in the business that they're in, where is the business going? Back to what we talked about earlier, what's the purpose? And then being open and honest and transparent. But I would say, as I look, I'm optimistic about the future in our industry, and I'm generally an optimist, but you do have to have levels of resilience to lead businesses through these times, and particularly in our industry where there's quite a few significant challenges going on, but a lot of opportunity as well.
Okay. Kevin, I've lots of things I'd still love to talk to you about, but I will have to bring this conversation to an end. But just by way of closing, I mean, 23, 24 has very much been the sort of the period when artificial intelligence and advanced technologies have kind of hit everybody's agenda. And I'm just wondering, from your perspective, technology, hopes and fears for it.
Yeah, I'm very optimistic about where technology will take us, Shirley. I don't buy into the doomsayers around the world will be run by robots. I just don't buy that. If we think about even this conversation we're having on Zoom, I can see you. We're having a conversation internationally that maybe 10 years ago, this technology would have not been available or certainly not in widespread use. So I'm very optimistic about where technology will take us to. I think in the world of work, we can spend too much time thinking about the negative side of it. I think it will take out a lot of menial work, and it'll improve the quality of work for many people. It'll take drudge out of work, and I think that's to be applauded. And it'll make us more efficient in many places. Like my working life is much more efficient from technology than it was 10 or 15 years ago. I'm probably not the fastest adopter to all these technologies, but I have people around me who are very in tune with it, and I make a point of trying to stay on top of it. But I'm very optimistic, very, very optimistic.
Great note to end this conversation, I have to say, in terms of that optimistic note. Kevin, first of all, thank you very much for taking your time out from your very busy schedule that you have. I very much appreciate these insights. I'm sure the people who are listening here today will as well. Lots of takeaways for me, lots of things to reflect on. Thank you so much for joining me today.
My pleasure, Shirley. Thank you for inviting me again.
And I want to thank you, our listeners, too. I suspect you've come from very different parts of the globe and from within different industries also. And I hope that you have found the discussion as insightful and as thought-provoking as I did. By the way, if you'd like to contact me, you can do that on LinkedIn or on shirleykavanagh.com. To our listeners, I hope this has been as useful to you as it has been for me.